The Fed likely to hike rates, and in part because of the outlook. As the Fed meets, it looks at a pretty rosy outlook for this year and next. Let's get right to the numbers from the CNBC Fed Survey. 3% this year. Now, that's up. We're doing this year over year, by the way. That's up a half a point over the course of the year, this outlook. Inflation, 2.5. That's also up about, call it, for 30, 40 basis points. Unemployment ticking down to 3.8. Look at 2019. It's not a typo. It looks pretty much like it, just down 0.2 on GDP, so not much of a slowing at all. Still well above where we were 2017. We did 2.2. Inflation about the same. Another tick down in unemployment. Jack Kleinhen's one of our survey participants, chief economist for National Retail Federation, says rarely are so many economic gauges of the U.S. economy so strong, including employment, income, retail sales, business spending, manufacturing, and small business. As a result of the bright sun from the economy, it's hard to see the dark clouds. So recession chance just 14%. That's pretty low as these things go over the next 12 months. There are two major threats out there. One, protectionist policies, still the number one threat. That you can see that was halved. Why? Because more and more people are starting to be concerned about a Fed policy mistake when it comes to interest rates. That is the number two choice, 22% doubling since the last survey. People like Mark Vittner, managing director and senior economist at Wells Fargo, write, the one risk that I worry about is the economy appears to be in such great shape that the Fed may opt to move a little more aggressively. That may prove to be a mistake, as much of the exuberance in the economy is built around expectations the Fed will raise rates slowly. So, guys, the question is not for this year. 2 rate hikes expected this year, 1 in September, 1 in December, 2 more next year. And the question is, does the Fed sort of feel its oats, so to speak, and get a little more exuberant on the rate hikes along with the exuberant economy, Tyler?